So we have quite a very interesting week, but of course, well, a bit more of a quiet week. Yesterday, the market tried to come back a little bit stronger when we talk about the bonds and bills on the Nigerian market space after a two-day public holiday. Let's talk to Bankole Odusanya, who is the head of fixed income for UBA, but is live to us from FMDQ Exchange Place. Bankole, it's good to have you here for Friday to wrap up the week for us. Has it all been quiet since Monday in the public holiday?
Thank you, Boston. Well, we're having a three working day week, but on Monday there was some action, and basically what's going on is that we're seeing retracement on the Treasury bills space, all through from 3 months to 9 months. Treasury bills maturities are being sold down simply to take profit because those discounts got to as low as 11 half levels or 11. With OMO stop rates at 12 half, it looks like Treasury bills market has found a new benchmark for the 1 year. So what we are experiencing is that for bills that are below 12, profit is being taken basically. On the bonds end, it's been quiet. We saw some action yesterday on 2034 and the 2028 bonds. And what happened there seriously was just sell-offs also. So to make the yield curve on the bond end at 14.5 really. On the T-bills end, we expect a new calendar for NTB primary issuance by the central bank. This is issued usually by the DMO. For the bond space on the 26th of June, we expect a bond auction, after which another calendar for the third quarter will be released. So basically, it's a quiet market in the fixed income, like you said, and the few action we're seeing is driven by liquidity, system liquidity.
Bankole, what will be your playbook for the June 26 period after we've all listened to, most likely listening to the central bank Governor Godwin Emefiele of his 5-year roadmap he spoke about? We're sure that will be coming after the June 12th, Wednesday, next Wednesday's public holiday. What will be your playbook for this into the third quarter? Technically, the first half of the year, we're done and dusted. Yes,
well, there's a lot of caution in the air, not just by the banks that participate in the secondary market in the fixed income space, even by FPIs and the PFAs. Those are the 3 major participants. Of course, there's expectation and some level of wanting to see the cabinet, especially the economic team, the Minister of Finance and special advisors on economic policy, and what policy the government will be adopting. This is simply because of the new product that is in play now, promissory notes coming in. It may simply mean on the long term, if they continue issuing, that is the government continues to issue promissory notes, it means that the amount they'll be borrowing in the T-bills and the bond space will be reduced, because actually it's 0 coupon. To issue promissory notes for them is at no cost, and if they have the understanding of paying later, it's like kicking the debts down the road. So having an idea and a clear path to their economic policy would help a great deal, not just for the debt markets, the long end of it, that's the bonds, and even for the equities markets. So basically, that's the action line for now. There's some caution when we see the calendar for bonds auction for third quarter. There'll be some more clarity, and then of course the budget has just been signed. The deficit in that budget ranges from between 1.6 trillion to 2 trillion. How much of it is going to be T-bills issuance? How much of it is going to be bonds issuance? And you know, how much of it will they actually do in foreign debt? That's through Euro bonds. So all that is not clear yet. There's some level of short-termism in our play. We're playing in the Treasury bill space on the medium term as we speak.
So what are they really looking for? And you spoke about it a bit. Is it who becomes the minister for what office? The head of the agencies within the financial services sector are still in place. So the only person you'll be perhaps looking out for is who will be the substantive full-time finance minister. All the other heads are currently in place. So what will be the key issue here in terms of fiscal direction generally, beyond the borrowings, beyond the regular calendars that we have in terms of offerings? Are there specific fundamentals, stories, or news, or information that both the FPIs, the foreign portfolio investors, and the PFAs are looking for? Something within the economic engine itself?
Yes, they'll be looking towards synergy. between the incoming Minister of Finance and the central bank governor on how fiscal policy has the handshake with monetary policy, especially with the management of inflation. It's a key space for us, debt traders. We want to know what inflation outlook will be and the mitigants that will be, handled by these two key principal officers. Should there be a spike in inflation because of fuel subsidy removal, which could be done before year end, or food prices, there would be some threat to present discount levels that we have at 12 and 11, with effective rate being at 13. You don't want to suffer a real rate of return, a loss in real rate of return on the long run. So you need to get some clarity as per who's coming in, what's their idea, what are they doing to manage inflation on the long run. And then, it helps to give some comfort for those who want to invest in 10 years, 20 years, and even 30 years bonds that we now have in our markets.
Bankole, add currency to the teacup or the Swiss cocktail of this conversation, because we can't do without exchange rate. Some folks says anytime from June, we should be looking at some level of soft devaluation.
Oh, well, I don't see any reason why we would be expecting devaluation. I think their objective has been largely met, and the objective here not being devaluation or revaluation is stability at the present level of 360 range and convergence of the various rates that we have via various intervention windows. And to a large extent, if you check, in the last 18 months, rates have converged, and US dollars is on the available at various windows. The wholesale windows on Monday, the retail FX window, which is going on today as we speak, and then the BDCs also have 4 days of access to US dollars. So I don't see any form of devaluation on the immediate. What we look at for devaluation or threat to evaluation most times is how much crude oil per barrel is selling at. It's dipped from 70 into the $60 levels. In fact, it's going to touch the upper level of 50 by, if you check out what our forecasters are saying. But even at that, our benchmark is at 60, and then it's ranged around that level for long, and we don't see a major drop like the dips we saw in 2015, 2016 for now. So basically, it's stability on the FX for now. That's what we expect.
Bankole, I love you selling a lot of hopes to me and into the market, speaking to hopes and opportunities moving forward. Thank you very much. Enjoy your weekend and see you back on the program in the very near future. Bankole, producer, the head of a fixed income at UBA, out. Speaking from FMDQ, Exchange Place, the home for bonds and treasury bills and other derivatives, as it was. So let's get back to the big story. Out of Nigeria's big economic data today, Nigeria's foreign trade. For the first quarter of this year, Nigeria posting 8.24 trillion naira in total external trade. But out of that, we got a surplus. What you call, the trade balance, well, you call it trade surplus. If you balance your imports of 3.7 trillion over your exports of 4.54 trillion, you will get about 831.62 billion naira. The bold print there is the total trade in naira terms. But if you break it down across the sectors, you find agricultural goods, 3.91% of that. Raw material goods, 4.45%. Solid minerals, 0.33%. Energy goods, 0.13%. Crude oil exports was still the king when we talk about our exports. 74.5% of the total exports of 4.54 trillion naira. Manufactured goods just not looking too good. 39.27%, and that's coming next to crude oil. So that's good. Sorry, I beg your pardon there. Yes, that's good. Then you find the other details there. 2.5% quarter on quarter, 7.52% year on year, and that's it. You can get the rest in our regular news bulletin for the rest of the day. Have a great day, everyone. Enjoy your weekend. Lay it back. We'll get back together on Monday, and we'll start from here.